Welcome back, my awesome people. Today, I am honored to be sitting here with Samir Kerbage. He is the CIO of Hashdex, one of the leading crypto firms in the world, with so many branches out there in North America, Brazil, Europe. So I don't want to spoil the surprise that we have in here. So I'm gonna let Samir talk more about himself. So Samir, how are you doing today? Thank you for meeting with me.
Hey, Jacob, I'm great. Good to see you.
Definitely. Thank you. Thank you. So Samir, so tell us about yourself, what inspired you to get into crypto, and maybe some history and core missions of Hashdex.
Sure. So I'm the Chief Investment Officer of Hashdex. I'm a computer engineer, always worked in the frontier between financial markets and technology. And I started to learn about crypto in 2000, end of 2015, 2016, with the enterprise blockchain movement. That movement, like back then, the narrative was that crypto was bad, was something for criminals, but blockchain was a big thing for enterprise, and it was going to be something interesting. So I started studying this and using it in my job. And then I started to discover like what DeFi is and what that could allow for like the transformation of the financial system. And then I started investing and decided to dedicate my career to it. So I met the co-founders of Hashdex in 2018, and I joined Hashdex in the very early beginning. And Hashdex is a crypto-focused asset manager with this global presence, like you mentioned. And our main mission here is to bring crypto as an investable asset class to traditional investors. Okay, so we're trying to bridge this gap and create the infrastructure for professional asset management for those institutional investors to get exposure to the space. And we started the company in the US in 2018. We quickly saw that it was going to be very hard to launch ETFs in the US because of the regulatory environment. And then we decided to start this offshore in Cayman. We found a regulatory path in Brazil. The regulators were very open to explore funds and ETFs, crypto funds and ETFs. And then we expanded to Europe. And in the recent years, especially now with all the changes that are happening in the US, the regulatory environment improving for crypto ETFs, we're expanding our presence in the US as well. So that's a little bit about Hashdex. We have something like $1.3 billion in assets under management and the world's largest crypto index ETF.
That is an amazing journey because you started right in the beginning, 2015, 2016. I'm sure many of us are very jealous about that. I wish we knew about it because, as you know, crypto right now is leading not only in the capital gains, but also revolutionizing the tech sector. All right, so let's get right into Hashdex's products. So currently you have two staple ETFs. You have the DEFI, which is the DeFi ETF, and you also have the NCIQ, the Nasdaq Crypto Index ETF. Can you tell us more about those two ETFs and what makes it different compared to other crypto ETFs?
Oh, sure. So the first one, ticker DEFI, is a Bitcoin ETF. Okay, so it's the longest running Bitcoin ETF. It was launched in 2022. As a futures product. It started with a futures allocation, and then eventually it converted to spot. So once the SEC approved all the spot products to go live, that product was also converted to a spot. So it's currently a spot ETF, okay, that gives access to Bitcoin specifically. And the second product that we have, which we just recently launched, is the Hashdex Nasdaq Crypto Index US ETF. So that product provide exposure to what we believe is our flagship strategies in all regions, which is the Nasdaq Crypto Index. So it's a way to get exposure to the asset class in an index with passive exposure, with rules-based implementation, and with a big brand, a big index administrator like Nasdaq, maintaining the index. So deciding which assets can be included or excluded from the index. This product launched a couple of weeks ago and is already, had like a very interesting like first few weeks, in terms of demand. And we believe this is the next stage in terms of like adoption after what we saw with the Bitcoin ETF, the demand we saw for Bitcoin ETFs last year. We believe that now, especially with the regulatory environment improving in the US, that the next wave of demand will be in crypto index ETFs. Okay, so right now this product has only allocation to Bitcoin and Ether because those are the two assets that the SEC is comfortable approving. But we believe that over time, as more assets are approved by the SEC to be included in ETF wrapper, this index will include new assets, and eventually this fund will also have more assets. So it's an evolutive product. It's going to evolve as the regulatory environment evolves in the US to have more assets.
I mean, that is amazing. And I love to hear that because I know currently it's so hard for the average person to get into crypto, right? Like getting a wallet, a ledger, key codes. So an ETF is a very, very easy way to get exposed to crypto, to your portfolio. And also it can be, you know, a tax haven as well. You can add it into your your registered tax accounts. So just to continue with that, how do you choose the assets? Like, for example, the DEFI. What is the weighting? How do you choose the specific assets to include in your ETFs?
So the DeFi is just Bitcoins, okay? It's a core allocation to Bitcoin. So it's the only asset that's eligible for that product is Bitcoin. On the NCIQ, we replicate the Nasdaq Crypto Index US index. So this is an index methodology that is run by Nasdaq, okay? And it's basically a process in which they have a set of rules, eligibility rules for assets. And they run this every quarter. So every quarter, new assets can be included or excluded from the index based on the rules. And the asset must be, for instance, must be traded in some exchanges in the US that are approved by Nasdaq. The asset must be supported by core custodians, which are also institutional grade custodians that would hold those assets in security. And those custodians must be approved by Nasdaq as well. And then they need to have a minimal liquidity, a minimum market representation. And there's two versions of the index. You have the Nasdaq Crypto Index Global and the Nasdaq Crypto Index US. On the global index, we right now have 9 assets in the constitution, okay? Because they meet all those eligibility criteria. And on the Nasdaq Crypto Index US, there is one more rule, which is the asset must be traded on a futures market with like a regulated futures market that the SEC would accept. So and this basically nails down the universe from those 9 assets on the global Nasdaq Crypto Index to 2 assets in the Nasdaq Crypto Index US, which are Bitcoin and Ether. Okay, so over time, more assets might be eligible to be included in the index. And once they are included in the index, the fund will look into including those assets in the portfolio.
That is news to me. I didn't know that there was, you know, I knew there was regulations, but I didn't know there was rules that you had to follow to, specifically depending on where you are, whether it's global or the United States. And so since last year, when the first spot Bitcoin ETF came out, you know, other firms have started creating their own Bitcoin ETFs, Ethereum ETFs. Like for me, I'm in Canada. So in Canada, we have the Purpose Investments, ETHY, BTCY, and its covered call strategy. Is there any type of strategy that maybe Hashdex uses, or what differentiates Hashdex crypto ETFs to other firms?
So there are 2 big differences. The first one is on the portfolio itself, right? So this is the first crypto index launched in the US. Okay, so it's the first time that you have a spot crypto ETF that holds more than one asset. It's not just Bitcoin, not just Ether, it's Bitcoin and Ether. And over time, it can include more assets if the regulators allow it. So it's the first crypto index ETF in the US. So that's a big difference because if you decide to invest in crypto, then the first question you should make to yourself is how much from my portfolio I'm going to allocate into crypto. Okay, and there are multiple ways to come up with that answer. But once you realize how much you want to have in crypto, then the second question is, okay, but which crypto should I buy? Okay, should I buy just Bitcoin? Should I buy Bitcoin and Ether? Should I have also Solana, XRP, Cardano? Like what other assets should I buy? And this is a big problem everywhere, like especially for professional investors, but everyone has this problem. So which assets should I invest in? And so we specialized in creating those indices to allow investors to have one instrument, one ETF in which they can invest in the whole market. Okay, so outside of the US, for instance, when you look at Europe or Brazil, where we have the full-blown Nasdaq crypto index ETF, this is a way to get a broad exposure to the market with just one investment. Okay, just like you would invest in a Nasdaq 100 ETF or an S&P 500 ETF, and you get the overall exposure to the market. Or if you want to invest in emerging markets, you would buy a China ETF or something like this. You won't be picking individual stocks. And this is the core idea of investing in an index, is that you get a broad market exposure. Okay, so this is the big differentiation of this product. It's the first one in the US market. Okay, and the other big difference is that Hashdex is a crypto-focused asset manager. We only do crypto. We work with brief crypto 24/7, and we've been around for more than 7 years. Okay, so we've been building this track record, this experience in running those products, which means that from the operational side and on the security side, this is way more. This is built on top of the experience we've been accumulating over the last few years. So it makes a difference on the execution, on the custody side, and all that. So you can rest assured that the asset manager that is taking care of the assets is a specialized asset manager that knows the space, has experience in the space, and has a significant track record in the space as well.
You know, that's actually amazing, because I know a lot of these other firms, you know, they do stocks, mutual bonds, they do so many things, and crypto is just another addition. So Hashdex is pretty much 100% crypto focused, which, I mean, that just makes you guys way more experienced, way more knowledgeable and skilled in the crypto sector. And I'm also looking forward to ETFs that have Solana, XRP, and others, because you know, that's one thing that a lot of people are kind of going towards. So since you are crypto focused, how do you deal with the volatility, the risk and the reward? Because as you can tell right now, in the past week or so, Bitcoin, Ethereum, altcoins, everything has been just swinging drastically. So how do you deal with the volatility?
So this is a great question, because volatility is part of the game in an emerging asset class like crypto. So if you look at the internet in the 90s as well, all the tech stocks back in the 90s, they had a huge volatility. All the internet stocks in the 90s had a huge volatility. And over time, the volatility decreased. So volatility means uncertainty. And this means that, people still don't know what is the fair price of that asset and how that's going to be used in the future, because most of the value that you attribute to something right now depends on future usage. So what we try to do with investors is to educate them about the investment thesis. Okay, so what are the fundamental value drivers for crypto, and what is the investment thesis on crypto, so that they understand what's happening in the news cycle. So instead of being caught in this short-term speculation, because there's a lot of speculation in crypto, as you know, and this causes like significant price fluctuations, we advise our clients to look at the fundamentals and see what's happening on the core fundamentals of the technology. And this is evolving pretty significantly. And with that evolution, the volatility is also going down. So despite being still a high volatile asset class, crypto is way less volatile than it was 5 years ago. Okay, and we believe that over time, this volatility will continue to go down as the technology matures, as we see more use cases coming, and as people understand how to value this. So it's part of the game. Where there is volatility, there is opportunity, and we like to make our investors, focused on the opportunity and focus on the long term, not on the short term fluctuations.
I definitely agree. I know so many people who've been holding crypto for a few years, and they've been through that emotional roller coaster. Bitcoin hitting 100, then it goes down to 50, then it goes to 70. Same with Ethereum. Right now, I think Ethereum is down about 50% from its all-time high. But again, as you said, right, it's a short-term, little moment, but there is a long-term potential. Talking about Ethereum, a lot of people say that Bitcoin is more of like gold, right? It's a storage of wealth, it's a storage of value. Do you think that maybe Ethereum will overpass Bitcoin one day, or do you think Bitcoin will always be the king of crypto? What are your thoughts on that?
So again, if I can take you back to the 90s, when the internet was emerging, people thought that the only thing you could do with the internet was send emails. Okay, and the big application of internet was the email. And now 25 years later, we still use email on our day-to-day lives, but it was not the application of the internet that created the most value to our society, right? We believe we are in the same stage in crypto. So right now, Bitcoin is what people hear about. It's the asset that's been around for a long time. It's been around for 15 years with no hacks, no glitches, like running 24/7. And it's also the asset that institutional investors are starting to understand. And especially now when we're talking about Bitcoin strategic reserve and all those things, Bitcoin is consolidating itself as a good store of value. And this is huge, okay? But when we look in 20 years from now, we don't think that Bitcoin would be the application of crypto, of blockchain, that created the most value to our society. Okay, so that's why we believe that in terms of investment, crypto is way bigger than just Bitcoin. If you're looking into investing in crypto, you should consider having a diversified allocation to other theses as well. So when we look at Ether and Ethereum, like it's a completely different investment thesis. It's not an emerging store of value. We're talking about a new cloud computing platform that allow us to program money, program value, so build smart contracts. And this is huge. Like this is the level of productivity that you can bring to our society if those solutions are adopted is huge. Okay, so and especially now with AI coming and having AI agents, the AI agents will not use cash. They will not use credit card. Those AI agents will need a digital native platform to transact value, and they will probably use smart contracts for that. So there's a huge space for smart contracts platforms overall, and Ethereum is one of those, the largest one today. But there are some challengers, right? There is Solana, Cardano. There's other platforms that are challenging and trying to advance this space as well. So it's too early to pick the winners. That's why we believe that a diversified approach makes sense when we look at investing in crypto.
That is a very, very good point because, as you said, Bitcoin has one purpose, Ethereum has another purpose, especially Ethereum with the ecosystem that it has built with the smart contracts, NFTs, Web3, and so on. So just to stay on that, do you think, for example, now that, as you mentioned, the Bitcoin reserve that Donald Trump wants to do for the United States, and I know other countries in the world are creating their own reserves, do you think these reserves will, I don't want to say replace cash, and as you said, the AI will not use cash. Do you think it is something, for example, I can swipe my debit card or my credit card, and it will use crypto instead of a fiat monetary?
Yeah, so I think the first step for that is stable coins. Okay, so we believe that stable coins they are a revolution in the payment systems. Okay, so think about it. Like most of your transactions currently, of our transactions, they're based on the credit card network. Okay, the credit card network was created in the 50s, and they still work quite the same. 70 years later, they still work the same. So instead of using mail or wires, now they're using the internet, but it's still a very inefficient network with a lot of intermediaries. They charging on average like 5% for each transaction, so it's very expensive. And with stable coins, you can have a real-time payment system with final settlement that you can run anywhere in the world 24/7. And this is way more efficient than using credit cards, way more efficient than using bank accounts. Okay, so we believe that this is going to be the technology that will allow us to do real-time payments in a very efficient way. So the next step, I would say, like for crypto adoption, will be stablecoins. After we have regulatory clarity in the US for stablecoins, we'll probably see banks issuing stablecoins. So on your bank app, you'll have a wallet with stablecoins that you can send to anyone in the world real time 24/7. So we believe this is the next incremental step. Bitcoin is an emerging store of value, right? It's not going to necessarily be used for payments, but it can be used to back as a collateral for our society. Just like we've been using gold for thousands of years, Bitcoin can be used as a collateral for issuing currency, for instance. And that's why we think it's very significant, this announcement of a Bitcoin strategic reserve, because this is a first step towards recognition of Bitcoin as a good store of value by nation states. And after the US does this, all the other countries, they will have to look at this as well. So you consolidate with that, you will consolidate Bitcoin as a good store of value for governments. And then we can talk about Bitcoin maybe backing currencies, just like gold used to back the currencies in the past before Bretton Woods.
That is a really good point. Credit cards have been around for decades, more than the mid 1900s, and we're still using them. So I think it just makes sense for the evolution of, now that we are a very tech heavy society, that we need to get into a tech heavy type of currency. And so just to talk about the point that you mentioned about institutions, are there any barriers or things holding institutions back from fully adopting crypto? I know it's still kind of unstable, it's still volatile, but other than that, because maybe 5 years ago, 6 years ago, institutions were like, nope, we are not touching crypto, we're not even going to talk about it. Even right now, some banks, I believe right now JP Morgan is still talking crap about crypto. But what are your thoughts on that? Why are institutions still just kind of waiting on the sidelines for a bit longer?
Yeah, so I think there are three drivers for more institutional adoption. Okay, so the first one is the technology itself. So the technology is evolving. Okay, so 2-3 years ago, it was very expensive to transact on a smart contract, so to do a smart contract transaction on the Ethereum network, for instance. And now we're seeing that it's more and more scalable and easier to run smart contracts. And I like to compare this when, again, talking about the internet with the broadband phase. Okay, so in the 90s, we had dial-up internet connections. Okay, so to listen to a music, you would need to download an MP3. It would take 10 hours to do this.
I've been there.
Yeah. So we saw big investments on broadband, and that improved the technology that allowed more use cases to come in. And now we can do like real-time streaming. We can have all the videos we want on YouTube, etc. So the infrastructure is evolving. That's the first driver. The second one is regulatory clarity. Okay, so those financial institutions, they don't like to be close to something that tomorrow the government might think it's illegal and might try to ban it, or that gives regulatory uncertainty to them. So having regulatory clarity will bring banks. We saw this in other countries. We saw this in Brazil, for instance. We're seeing now with MiCA, a new regulatory framework in the European Union. So now banks are starting to have their own crypto solutions. And we're going to see that in the US as well, especially as we have more regulatory clarity. Looks like that's coming. Let's see. And the third one is what I like to call the generational shift, right? So decision makers on those institutions, they are from a different generation from this new generation that's creating this technology. And just like, again, the internet, the people who created value with the internet were not my grandfather. Okay, so my grandfather is still trying to figure out the internet. Okay,
yeah.
When the new generation came, they came to decision-making positions and they made a difference. They started to use that technology as a leverage to their company. So this happened with the internet, and this is happening with crypto. So as this new generation comes to market, comes to decision-making positions, they're going to leverage technology, especially crypto and AI, to make their companies more efficient. And this will happen over time. So I think those are the three main drivers. And what's interesting to see when you look at the fundamentals again is that those three things are happening, right? So the technology is getting more scalable. The regulatory clarity is coming in multiple countries around the world, and now finally in the US. And we're seeing this generational shift happening. So like we couldn't be more optimistic about the investment thesis for crypto.
My viewers, those three drivers are diamonds in the gem. That was amazing, amazing knowledge. Thank you for that, Samir, because it is absolutely true, especially now with the generational shift, right? Like our parents and grandparents, they were the credit card era. Now we are going into, and then our era was the internet era. And then the future will be, of course, crypto and AI. And so now that we're looking into the future, let's look at the competition. Ethereum is, the second largest crypto. It's got the smart contracts. It has all the utility. Thousands of projects are built upon it. And then comes Solana. Solana is supposedly the Ethereum killer. What do you think about the relationship between Ethereum and Solana? And is there anything else coming up or could be coming up in the future that could probably compete not only against Bitcoin, but maybe compete against Ethereum and any other altcoins?
Yeah, so I think it's too early to call the winners. Okay, so Ethereum has been the longest living one, was created in 2015, so 10 years now. They're still evolving, so there's a lot of things to evolve in the Ethereum roadmap. We have Solana. Solana is a little more than maybe 5 years, 4 years. So they still have a long way to run. They have different purposes. Okay, so Ethereum is decentralized. Is designed to be fully decentralized, and for that they sacrifice a little bit on coordination and scalability. Solana is designed to be high performance, low latency, to support like a lot of transactions per second. And in order to do that, they might be more centralized. Okay, so we believe that over time, we're going to have specific applications would prefer specific chains. Okay, so some applications that really require like a full level of decentralization might opt to go to implement in a solution like Ethereum. And other applications that need, for instance, real-time settlement, that need like high-frequency transactions like financial applications, like derivatives, they might decide to go with Solana. Okay, and we might have like a different blockchain platform that might come up tomorrow that would solve everything in one place and might consolidate everything. But personally, I think that the future is going to be multi-chain. So we're going to see multiple blockchains for specific purposes. And even for specific regions, we might have like different preferences. And so it's too early to call the winners. It's too early even to see if we're going to be like a winner takes all, or if we're going to see a multi-chain world. So it's too early for that. That's why we believe that it's better for investors to look at this space as a whole and have a broad exposure to the asset class.
That is something that I think everybody's going to have to think about, because right now, when you look at all the forums online, everyone is saying Bitcoin's the best, Ethereum's the best, Solana's the best. But as you said, they have different uses. And depending on what your use is, you can choose, okay, I'm going to go with the Solana network. I'm going to go with the Ethereum network, or whatever it is, depending on what you need it for. That's a very good point. Thank you, Samir, for that. And so now let's look at the broader world, macroeconomics. Currently, crypto, it's not having the best of times with the cycles. It's going bull cycle, then bear, and then bull and bear. Donald Trump, he has the reserve. He got elected. Crypto, had an awesome pump. What do you think could also affect the crypto market? Is it maybe global politics? Is it maybe hackers? Is it maybe decentralization becomes centralization? What do you think could highly affect the crypto market for the positive or even for the negative?
So I think there are three things. And the first one and most significant one maybe is the macro environment. Okay, so we are living a paradigm shift from the Trump administration. So he's changing a lot of things. They like to say that they're moving at tech speed, okay? And which is interesting, but on when you're doing a technology company, like you normally say you move fast and break things, right? all the things that he's doing, he's creating a lot of uncertainty. Maybe he will break some things and then we'll have to fix it. But it's definitely creating a lot of uncertainty. So all asset classes are suffering with that. The lack of, like, what are the tariffs, and what about the Ukraine war? Like, what are those things that are happening? Like, and all those crazy things that come up every day. So those things are creating uncertainty. Markets, they don't like uncertainty. So risk assets are being penalized right now for this lack of certainty, and also on a higher interest rate environment. So as we see more clarity, and especially in an environment with lower interest rates, so we start to see interest rates drop, and that's going to be positive for all risk assets, crypto included. Okay. The second big factor that we should be looking at is regulation in the US. Okay, so this industry has been basically hot, has been like stopped from evolving because of lack of regulatory clarity in the US. So a lot of things that blockchains can be used for, they haven't been experimented still because the lack of regulatory clarity, because like people are afraid of going to prison in the US for doing it. And now, as we see more laws coming from the Congress, and I will see more clarity, the SEC now, they're finally, reviewing their approach to crypto. Those things can be huge catalysts for adoption. So as we see more regulatory clarity, this can be extremely positive for like the short to midterm outlook on prices. And the third one is applications, right? So we want to see real world usage of blockchain, and a killer app that's going to be on my cell phone, your cell phone, we're going to use on a day-to-day, and our parents will use it on a day-to-day. And this can be extremely bullish for our investment thesis overall. We believe that this next killer app, the one that everyone is going to use, is a stable coin after we see regulatory clarity. So hopefully we're going to see in the coming months how that's going to play out. So I would look into those three factors: macro environment, regulatory clarity, and then actual applications.
That is going to be something my audience is going to absorb and use in their next crypto investment, because it's absolutely true. Uncertainty scares people. The fear greed index right now, with everything with the tariffs and global issues going on, uncertainty. I know, what was it, just a few days ago we had a big meltdown, and it was because of uncertainty. So I guess the main point in crypto is uncertainty equals a downturn and fear, and when there's more clarification from the SEC and the regulations, it will stabilize and consolidate the crypto space. And so about the SEC, are they, especially now that the SEC has changed a few people with the new administration, do you think the SEC is going to favor even the smaller altcoins like XRP, Cardano, Avalanche, and so on? Or do you think Bitcoin, Ethereum, maybe Solana are going to be, we're not picking winners, but are those going to be leading the way? What do you think about the SEC? They're kind of favorable, but what do you think about it?
Yeah, so I don't think the SEC will favor any asset specifically, not on purpose at least. But the way I like to think about this is that Bitcoin has already a very strong regulatory clarity. Now we have the US government adopting Bitcoin and having a strategic reserve of Bitcoin. So Bitcoin is very consolidated. Its core use cases, its core investment thesis as an emerging store of wealth is playing out okay. And the SEC, there's nothing the SEC can do like to help it or even to fight against it. So Bitcoin has been very consolidated. The approval of the Bitcoin ETF last year was a big milestone that was in the hands of the SEC. But now looks like the SEC has nothing to do with Bitcoin specifically.
So Bitcoin is not going to go to zero then.
Bitcoin, I don't know where prices will go, but there's nothing the SEC can do, like, to fight against Bitcoin.
It's a proven asset at this point.
Exactly. The other assets and the other applications, they still need regulatory clarity to thrive. So I tend to see that those other applications will benefit more from a regulatory clarity than Bitcoin itself. Okay, but which applications will benefit? I think that's it really depends on a case by case. But what I normally see is that smart contract platforms Ether, Solana, Cardano, XRP, like all those applications, they tend to benefit more from regulatory clarity than Bitcoin itself.
Good point. And so because I know there's so much different digital assets out there now, if you can bet on one, your own personal, you like a small altcoin, hoping that that's going to be the next one. Is there any digital assets that you kind of are gunning for?
No, not specifically. I know there are some very intriguing projects that I like to follow, but overall, like I would say, 100% of my crypto investments, they are passive. Okay, so I'm personally investing in a diversified index because I don't have time to pick the winners. I want to have a broad market exposure. So I like to track the markets. I like to see specific projects, but at least the way I approach the markets when I'm investing is diversified and passive.
And that is why ETFs are the best bet. And so for Hashdex, what are any upcoming products or crypto ETFs that you might be coming up with? Is there anything coming up soon or in the year?
Yeah, so right now what we're doing is we have some proposals with the SEC to change the products to allow for more assets to be included. And we are working with the SEC and tracking closely what the SEC is going to do in terms of clarity for new crypto ETPs. So one of the big items on the SEC agenda is define a framework, how they're going to approach new crypto ETPs being approved, new crypto ETFs being offered to the market. And that's where we're putting our attention on is I try to work with the regulators to have like a clear regulatory framework. And with that, we can introduce more products. And that's what we're hoping for. And that's where our focus is in the coming months. So work with the SEC to help design this framework, and then we can bring more products to market.
I think that's what a lot of people are looking forward to, because right now we have Bitcoin and Ethereum, the two big ones. And then, of course, there's so many others that people, as I said, gas fees might be high, things hard to get into. And so they are looking for an ETF that will hopefully, like a basket with, all these little other altcoins. And so our last question. If you were to give advice to a new crypto investor, or maybe just even a professional crypto investor, what type of advice would you give them, especially in this very volatile market, but maybe in a couple of years when it becomes more stabilized?
Yeah, so I always say the same things for investors that are looking into crypto. So first one is look like for a level of allocation that will allow you to sleep at night. Okay. So what we normally see, especially from professional investors, from institutional asset allocators, is an allocation between 1% and 5%. Okay, but that's really personal. So what I'm saying is like single digit allocation. Don't go crazy like 50%, 60% allocation of your wealth, like sell your car to buy crypto. Don't do that. Okay, so use this as a diversification in your investment strategy. So single digit allocation. Long-term horizon. So look at, like, when you're investing in crypto, don't look at the prices on a day-to-day, because that's going to cause you anxiety. Like, you need to be tracking your investments in a 3 to 5 year window. Okay, so that's the windows we see technology, changing our lives. So think about, again, the internet. Imagine if someone invested in the internet back in 1998. Like, would it make any sense to be tracking prices on a daily basis?
Exactly.
No, just hold this for 10 years and it's going to be the best investment on your portfolio, right? So that's the same for crypto. So do your small investment on a long-term horizon. Don't try to go to the speculation, trying to buy the next cool thing or even go into meme coins. Just, look for the long term. And the third one is go diversified. Okay, so have a diversified and maybe a passive also approach to the space. So having exposure to more than just Bitcoin, because there's a lot of things coming as well. So that's what we normally recommend. So a small allocation, single digit allocation for the long run, at least 3 to 5 years, and diversified.
That is exciting news, because that is all what we're hoping for. It is kind of like the internet, the dot-com era that we're kind of going through right now. Everything is brand new. Everything is volatile. Everything is what's happening, we don't know yet. But as long as you make a good decision, do your due diligence and research, you can definitely benefit in the next 3 to 5 years. Me personally, I'm holding for 10, 15, 20 years. It's not something I'm going to sell just because someone on television said something. So viewers, make sure that you actually listen to what you believe and what your portfolio says and what you're afford to lose, just like stocks, right? So Samir, that was amazing information that you gave us today. Is before we end, is there anything that you want to talk about, mention about Hashdex, about crypto in general? The platform is yours right now.
I think that's it, Jacob. It was great having this conversation with you. Like, count on us if you have any questions. Like, feel free to reach out to us on X or email on our website. We have a lot of educational material on our website, and overall, it's been very fun. And thank you for the opportunity.
No problem at all. And my viewers, I will have all of Hashdex's information in the description box. So please definitely check them out. They have some amazing ETFs, especially those that have not got into crypto yet because maybe you're just starting off. You don't know much about it. They have plenty of information on their website, which you can check out. Samir, thank you so much for sitting here with me today. I know it's a busy day for everybody right now during this crypto bull bear run. And my viewers, this is not the only time you'll see Samir on this channel. We would love to continue hearing about the journey, hearing more about their ETFs. So my viewers, subscribe and like. And Samir, thank you so much. And my viewers, until next time, stay ranting.